If you're in crypto, I'm willing to bet you're feeling the pinch right now. It's tough watching your portfolio bleed out while it seems like every other asset is just shooting for the moon. Well, in this explainer, we're going to dig into why that's happening and why maybe, just maybe, patience is the name of the game. Let's get right into it. It's a horrible feeling, isn't it? You open your app and it's just a sea of red. At the same time, the news is full of stories about other markets hitting all-time highs. It's enough to make you question every single decision you've made. So, what is actually going on? Is it true that absolutely everything is booming except for crypto? Let's take a closer look because that feeling of being left behind is very, very real right now. And this naturally leads to that one huge question. It's probably been nagging you, maybe even keeping you up at night. Should I just call it a day? Is it finally time to quit crypto for good? I mean, this chart right here really tells the story. Just look at it. On the one hand, you've crypto, down 25% since last year. And then you compare that to the old school stuff. Gold is at 85%, and silver has gone up by a whopping 230%. When you see that contrast day in and day out, the pressure to just sell everything becomes immense. But here's a thought. What if that pressure you're feeling, what if it's not just about the numbers? What if it's actually about how your brain is wired to react to those numbers? Let's talk about a powerful little thing called financial FOMO. Now, there's a technical name for this feeling. It's called relative deprivation. And all it really means is that thinking feeling you get when you start comparing yourself to others who seem to be doing a lot better than you are. And it's so important to understand this. This isn't some personal flaw. It's a feature of being human. It is a completely natural, hardwired response. Your brain literally screams, danger, when it thinks you're falling behind the pack, even if you haven't actually lost a single rupee. Okay, but before we let that feeling take complete control, let's just press pause for a second and zoom out. Sometimes the best way to get perspective on the present is to look at the past. Because this whole scenario, an asset class lagging behind while others are booming, we've definitely seen this movie before. Let's take the story of tech stocks. If you go back to 2006, energy and utility stocks were the talk of the town. They were absolutely booming. Tech, on the other hand, was doing pretty badly. A lot of people were questioning its future. Well, fast forward to the 2010s, and we all know what happened. Tech didn't just bounce back, it took over the entire market. And when you put the two side by side like this, well, the parallel is kind of striking, isn't it? On the left, you've got tech back in 2006, struggling, facing doubts, while everyone else was making money. And on the right, you have crypto today, down 25%, facing those exact same questions. The script feels almost identical. Okay, so history is one thing, but what about the fundamentals? The biggest knock on crypto has always been that it doesn't have any real intrinsic value. But you know what smart investors do when a market is down? They look for one thing, cash flow. And guess what? You can actually find it in crypto. So let's stop talking in theories and look at a real concrete example. We're going to check out a protocol called Hyperliquid. To put it simply, it's a decentralized platform where people trade crypto derivatives, and it makes money from the fees on all those trades. Now, just look at this number. Hyperliquid is on track to generate close to $1 billion in revenue in a single year. This isn't some imaginary future value. This is real cash being generated by the business right now. So what do they do with all that money? Now, this is the really clever part. The protocol takes a massive 97% of that revenue and uses it to buy its own token back directly from the market. And what's the result of that? Well, all of that constant massive buying pressure basically acts like a safety net. It creates what investors call a price floor. It provides a base level of demand that can stop the price from just falling off a cliff. Now that is a sign of real fundamental strength. Which brings us to the main point of all this. When you put everything together, the psychology, the lessons from history, the real fundamentals, it all points to one single strategy. And ironically, it's often the hardest one to pull off: patience. This quote really just says it all, doesn't it? The last bull run made investing look almost too easy. It made a lot of people think that's how it's always supposed to be. But what we're seeing now is a sobering dose of reality, a reminder that real, lasting gains take time. So let's wrap this up. Key takeaway number 1, beef freckles are totally normal and panic selling is almost always the most expensive mistake you make. 2, history shows us that buyers do come back and new innovative projects continue to be built. And of course, the big disclaimer, this is just for information, it is not financial advice. Crypto is incredibly volatile, so you absolutely have to do your own research. And especially for us here in India, the regulatory situation is always up in the air, so be extra cautious. And that leaves us with the final question, the one you have to answer for yourself. Is crypto really finished this time? Or is this just that quiet, uncomfortable, and uncertain moment that comes right before the next big comeback? If history is any guide, for those who could afford to play the long game, patience isn't just a virtue, it's a strategy.